little too simplistic to say this is a tax rally, right? I mean, we often have a Santa Claus rally even, and stocks around the world are higher, and there isn't tax reform going on in any other country.
I think it may be a little simplistic, but I think it fundamentally is. I think this is a little bit of a, it ends up being, unfortunately, a little bit of a partisan issue where people don't want to attribute it to, you know, the Trump rally or the tax rally, so they can find other reasons. U.S. growth is doing well and so on. But I think at the root of it all is an increase in sentiment, increase in business confidence, and increase in consumer spending and consumer sentiment. And the fact that this rally is very coordinated globally, I think, is a very, very interesting and important point.
Just to follow, are you saying that the rally in indices around the world has to do with, you know, the picture in America improving then?
Well, no, the rally in the U.S. is the bulk of it, I think, is politically driven. However, you have independent factors, especially in Europe, which I think has been kind of one of the shining stars of the economy and of the markets, both last year and this year. Very Euro-specific issues that are quite positive.
This is what's happening with the markets, but I wonder what the tax cuts, what sort of impact will they have on the economy? This chart on the Bloomberg, a simple chart of debt ratio to GDP. And you can see that the Bush cuts, Reagan cuts back in the 1980s, they were done when debt ratio was 32%, 55%. Right now we're past 100%. So if you add more to the deficit, wouldn't the tax cuts just be meaningless because they would offset the economic growth that we can expect?
Yeah, let me answer that. I'll rely on what we're strongest on, which is not economic forecast, but really on the policy side. And I'll point to some of the Federal Reserve work that was done. The Fed, as you might remember, increased their growth rate for 2018, the central tendency forecast, from 2.1 to 2.5%. That's before many of the FOMC members have even factored in some of the impact of the fiscal stimulus. So there is a very real growth momentum that's kicking in from 2017 through 2018. I think that will be boosted further by global growth, continued strong growth in China and Europe, as I mentioned before. And you know, the debt overhang in the very long term, I think it has an impact economically. And interestingly, in the Fed forecast, you have a kind of a sugar high for 2018, but then the numbers come back down for 2019. But all the indicators are that the stimulus and the boost is very real, and I suspect could be higher than the 2.5%.